Hi, everyone. This is Jason Burack of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is Nolan Watson, who is the CEO of Sandstorm Gold and Sandstorm Metals and Energy. Thank you for joining us here today, Nolan.
Well, thanks very much, gentlemen. I appreciate it.
Nolan, congratulations on a successful 2011. Going forward in 2012, what is your outlook for the gold market, and what is your price target for gold by the end of the year?
Yeah, for the rest of 2012, to be candid, I think one of the reasons that the equity market's been suffering in the precious metal side of things is because there's significant volatility, and very few people actually know what to expect, which is why a lot of people are, one of the reasons people are selling a lot of the equity. So I will fully and freely admit that there are a lot of things that haven't happened yet in 2012 that can change what the gold price is. Generally speaking, my expectation is that the price of gold is going to end the year higher than where it is today, and I wouldn't be surprised to see it between $1,800 and $2,000 an ounce, maybe even a little bit higher by the end of the year.
Yeah, Nolan, and I think we saw a couple weeks ago a false breakout in gold because in terms of technical analysis, the gold price broke, the key overhead resistance levels on strong volume, and then it seemed like the next day there was that Fed news conference, and then the gold price just got smashed. Now, I think, though, the volatility, like you said, it's just really, really wreaking a lot of havoc on, investor sentiment, on management teams, and project financing. So for my question here, I heard from reading the articles of people who attended PDAC recently that a few financing for larger mining projects who are close to being ready to go into construction and past the bankable feasibility stage have fallen apart. Do you think these projects were marginal and not robustly economic, or do you think that this is a growing and worrisome trend we are going to see because beneath the surface things are actually getting worse for many large banks, and they're worried about making large financing commitments with the volatility you talked about in commodity prices?
Yeah, I think it is a trend. I also think that it's something that we're going to start seeing more and more of. The reality in this environment and the theme of 2011, and I think it's going to be a continued theme in 2012, is that the cost of building mines and the cost of operating mines is going up substantially. Every time a company puts out a new feasibility study, the CapEx numbers are going higher, the operating cost numbers are going higher, and the projects are getting more and more marginal every time you look at them using fresh, updated numbers. There are a lot of companies out there that have gone to finance themselves and have had those financings fail, and I think the reason is that in this price environment, what's happening is the price of the commodities aren't going up that fast anymore compared to the rate that the cost of building the mine and producing the product is going up. So you're seeing the cost of production going up faster than the actual price of the metals. And so a lot of investors are getting very worried about the prospect of investing large amounts of money into projects that are going to take several years to build. And so in this volatile environment, people are just saying, I would rather focus investing on things that are currently yielding and currently cash flowing and lower risk because I don't know what the future is going to look like. And you're seeing that anytime a company goes to finance their project, investors are only going along and financing those companies if there really isn't any reason to say no. So the number one thing that you're hearing people on Bay Street and Wall Street say these days is when it comes to mine project financing, if there's any reason for an investor to say no, they will say no today.
And that's very interesting, Nolan. And, we have seen the regular stock market go up quite a lot. And in my opinion, I think Ben Bernanke's financially engineered a nominal bull market with all this stimulus and quantitative easing. Now, do you think companies like Sandstorm Gold have a tremendous opportunity to come in here and fill the financing void for gold miners if banks start canceling more and more projects for some of these near-term producers?
We do, and right now we are busier than we've ever been, and I can honestly say that our pipeline of deals is more full than it's ever been because there's just a lack of ability to get the financing through other traditional means out there. That's the good news for us. The bad news for us is that there are so many opportunities. We have to pare those down and be very selective because we do have realistically a limited capital base, so we can't do everything that comes in the door that we think is a good project. We have to be very selective and take our time and make sure that we do the right deal. So that's our focus for 2012, is not. We don't worry about whether or not we're going to get more deals done. We're just ensuring that the ones that we do are the right ones.
Interesting point, Nolan. Just going back to your business model, and for people out there that doesn't understand your the streaming business model that you guys have, why would a mining company go to Sandstorm to finance their mine rather than go to a bank and get a loan like what usually other companies out there do?
Yeah, absolutely. I think one of the reasons is that, first and foremost, Sandstorm isn't a bank. We're 100% equity financed ourselves. We don't owe money to any other counterparties, and that allows us to act in a lot more friendly manner than a bank typically would. We're not nearly as nervous about the short run. We're longer-term thinkers. We're mining guys, and so we're a lot easier to deal with than banks. One of the other reasons, quite candidly, is that we're just able to act significantly more fastly than a bank. So a bank in the junior mining space, to get a loan can take anywhere from 6 to 12 months, and I've seen it take as long as 24 months, whereas Sandstorm can usually get a deal done in 1 to 2 months from having met the company. So if a company's looking to build a mine and needs capital fast, Sandstorm's a lot better place to get the money than a bank.
That's very interesting, Nolan. And you know, you talked about some of these juniors where the financing is falling apart. Do you think M&A activity will pick up because of that in the next 18 to 24 months? Do you think a larger company, maybe if a junior did a JV or got bought out, do you think that would really help the industry, a larger consolidation?
There certainly are a lot of people that are projecting that M&A activity is going to pick up because as you see the valuations of companies get more and more depressed, while simultaneously the companies that are in operations are actually making a reasonable amount of money. They're piling up cash. They're looking for places to deploy it, and a lot of stuff looks cheap. So I do believe that you're going to see an uptick in M&A activity. Having said that, it's really tough to do M&A when prices are incredibly volatile because there's always mixed expectations between buyers and sellers. So although I do expect M&A activity to pick up, I don't expect it to be quite as much as everybody else expects.
Interesting point. I want to shift gears here and talk about natural gas for a few minutes here. Do you believe the price of natural gas has bottomed as you see natural gas companies cut their supply of natural gas? You also see some natural gas companies switching from gas to producing oil, which was a result of the knockdown starting in 2008. And when do you expect investors to start paying attention to the natural gas market, as your company has been doing lately? Sandstorm Metals and Energy.
Sandstorm Metals and Energy. We've done a natural gas in the last 8 months here. It was with a company that has a really interesting natural gas asset in Utah. It's called the Gordon Creek property, and we really like natural gas. Right now, you asked the question as to whether I think the natural gas price has bottomed. To be candid, I don't know that we're at a bottom here yet. I think the natural gas price is going to be very, very soft for the next 24, maybe 36 months. One of the great things about our streaming model is that when we enter into a contract, we do it for the life of an asset. So if the asset's a 40-year play, then we're into it for 40 years. So I'm always a lot less concerned about what the next 24 months look like and a lot more concerned with what the next 40 years look like. And so for natural gas, despite the fact that prices are very, very low right now and most assets are uneconomic, very bullish longer term, and I do think that natural gas is going to play a significantly increased part of our energy usage future, and I do think that prices are going to rebound in the longer term. We might not see $12 natural gas again, but it is a very volatile commodity, and I wouldn't be surprised to see natural gas prices in the longer term averaging $6, $7, or $8.
For our listeners who hold positions in Sandstorm Metals and Energy, Nolan, can you talk about some of the energy streams and base metal streams that are coming online in the next 18 months? Because we've had some people a little bit worried about one of the coal streams, I think, at the company, and I think there was some solvency problems with one of your coal streams.
Yeah, so Sandstorm Metals and Energy, we've done 5 deals now. Over the last year and a bit, we've raised $150 million. We've deployed about $100 million of that, and so we've got a significant amount of cash on our balance sheet right now. We have no debt. The streams that we have purchased, we purchased a really great copper stream from a company called Donner, and they've got a property that Xstrata is building right now that is basically going to be one of the lowest cost zinc mines in the world, but it's got a really nice copper and gold byproduct. And so we bought 17.5% of the copper byproduct that's going to be produced from that mine, and we're paying 55 cents a pound for that copper. We've also done a small oil deal with a company called Terex, and we've done the natural gas deal that I just recently mentioned with a company called Thunderbird, and we've done a metallurgical coal deal with a company called Nova DX, and then the one that you're probably referring to that's having some solvency issues, we did a very small thermal coal deal with a company called Royal Coal. And thermal coal prices have decreased significantly here in the last 3-4 months, and they've had troubles being able to operate profitably, so they've temporarily shuttered operations. But that investment only represents about 10% of our capital base. So the other streams that we've invested in are doing fairly well. We've got a significant amount of cash on the balance sheet, and companies' stock prices and commodity prices in some areas are very depressed. So we're very excited about the ability to use that cash on our balance sheet to make some smart acquisitions this year.
Nolan, for metals and energy, is there a particular commodity that you guys will be focusing on for the next 12 to 18 months that you really like to get exposure to?
Well, we like to get good deals wherever we can find those deals. And a lot of people say, well, do you like natural gas or do you like copper? And the answer is it depends on the price of what I'm buying it at. I want to ensure that we get what we think is going to be a deal that returns significant value to shareholders over the longer run. Our focus over the next 12 to 18 months is going to be on mainstream commodities that our investors can understand. So you won't see us investing in things like niobium or vanadium or other obscure elements to any great degree. We're going to focus on things like copper and zinc and oil and natural gas and commodities that investors understand.
Very, very good, Nolan. Now, I want to transition back to Sandstorm Gold because that is the largest company. And I just listened to your conference call yesterday, even though the conference call was late last week. And you guys were talking about uplisting, and it sounds like a lot of things are, you've planted a lot of seeds the last couple of years, and they're finally coming to bear fruit. So in your opinion, has Sandstorm Gold already reached that tipping point where critical mass is achieved and the company is now self-sustaining from cash flows for its own growth?
Well, it's interesting. Whether or not we have reached a tipping point really depends on the size of acquisitions that we make going forward. You're absolutely right. Sandstorm has finally achieved at least a tipping point in the sense that 12 months ago, 18 months ago, we had absolutely no cash flow from operations, and we had no money, and we were sitting on our hands, and we were waiting for cash flow to start kicking in from our various operations. 12 months ago, we had 5 streams, and over the last year and a bit, we have started cash flowing and received cash flow from operations. We have now purchased 2 new streams out of our cash flow from operations. So we now have 7 streams, and we did that without having to issue any equity. And today, as we stand, we're actually making several $1 million a month. I think probably $3.5 million a month of true free cash flow. We have $30 million of cash on our balance sheet. We have an undrawn revolving line of credit for $50 million, so we're completely debt-free, but we have the ability tomorrow to draw down $50 million for future acquisitions. So in terms of acquisitions going forward in that tipping point, I think with cash on hand, cash flow from operations, and our revolving facility that's undrawn, we could do transactions well over $100 million over the next year without having to issue any equity.
Interesting point, Nolan. And after listening to your conference call, people ask about the Brigus Goldstream, and there's a lot of people, investors out there, that are concerned about the Brigus Gold. Is that justified? It sounds from your conference call that you're not really worried about what's going on with Brigus Gold, and that you're confident that they'll get it turned around.
Brigus just last week closed on a new $15 million equity offering to give them the money to continue the underground development at their mine there at the Black Fox complex. And I do believe that should give them sufficient capital to get all of the working faces required underground to get access and get the tonnage up. Brigus Gold actually put out a press release this very morning talking about the progress that they've made. I'd encourage everybody to look at that. And the conclusion of it is that it appears they have all of their underground dilution issues solved. The head grade reporting to the mill over the last month has been at at or around reserve grade, which is where you need it to see, and the tonnage has increased dramatically. In fact, apparently over the last couple of weeks, the tonnage they've been averaging every day is double the previous month. So they really do appear to be getting a handle on things. So one of the great things about the Sandstorm streaming model is that even if it does cost a mining company significantly more to get their asset up and running and into production, and it takes longer, during that period of time, they may be losing money, but under the streaming agreement, we've been making a significant amount of money on it. So we're getting hundreds of ounces per month from those guys, and we make just shy of $1 million a month off of those cash flows. And so we're very significantly positive with cash flow from that stream.
Very nice, Nolan, and I know that's going to really help out some of our listeners there who hold both Sandstorm Gold and also Brigus Gold, and we're wondering your opinion on the Black Fox Goldstream. I have a few more questions here before we wrap up the interview, Nolan. Can you talk about some of the gold streams Sandstorm Gold already has in its portfolio, where more gold reserves have been found at the mine, and mining plans can be expanded for some potential organic growth for some of your current gold streams already in the pipeline?
Yeah, that's starting to happen at most of our assets, actually. Luna Gold is probably the one where that is most pronounced. When we did that deal originally, they had a resource of about 1 million ounces, and our deal is to buy 17% of what they produce for $400 an ounce. So the difference between $400 and the spot price is our profit margin. And they just did an updated resource study that they put out at the end of last year that has taken their resource to 3.8 million ounces. And I do expect that there will be future increases in that going forward. And a number of our other partners are experiencing that. So we've done a deal with a company called Metnor Resources, which on the day that we did the deal only had a 3.5-year mine life, and they've been doing a significant amount of drilling over the last year and a half. And I do expect a resource update, in fact, probably a number of resource updates over the next few years, and each one I would expect to have successively higher resources. I would say that's fairly standard across a lot of the deals we've done. Another example is we've done a deal with a company called Rambler Metals and Mining. They're a company based out of London, and they've got an asset in Newfoundland that is a copper mine with gold byproduct. And our deal with them is we get 25% of the gold byproduct just given to us. We don't have to pay anything per ounce for it. And they actually came across and discovered over the last number of months a gold zone in their mine that's basically all gold. It's high-grade gold, and it's significantly expanding the number of ounces of gold that they have in the mine. And we get all of that for no additional payment. So that's one of the benefits of the streaming model, again, is that you make an initial investment on day one, and then for years to come, you keep getting rewarded in terms of the upside as they expand the mine.
Yeah, and you guys have a lot of exploration upside, too, with Brigus Gold at the Black Fox, because I've been looking at the drill hole results for more than the last year, and around the 147 zone and the rest of the Black Fox complex at Grey Fox and Pike River, they're getting really good drill hole results there, too.
Yeah, Brigus, they've got, it's very interesting, and although I can't explain over the phone exactly how the ore body is shaped, but they really have sort of three series of concessions. They have the Black Fox concessions, they have the Pike River concessions, and then they have the Grey Fox concessions. So our deal covers all of the Black Fox concessions and a portion of the Pike River concessions. Where we're really excited about the exploration potential is just below the main open pit on the Black Fox concessions. We think that there's a significant ability for that mine to extend down depth, and we think it can go to depth significantly greater than it currently is, which it's one of those deposits where we would hope that every year they'd just be able to replace their reserves and resources and keep going for a number of years to come.
Very, very good, Nolan. And I have one more final question here before we wrap up the interview. What are Sandstorm Goals' goals for the rest of 2012? What would you like to see your company accomplish given these tough market conditions and the amount of cash flow you guys already have and your credit facility and stuff?
Well, for Sandstorm Gold, I think we've done a good job of executing our business model and showing that every year we make a couple of smart acquisitions that add to our scale, that add to our scope, that add to our risk diversification. So for my hope for 2012 is to take our significant cash flow from operations and go make another couple of smart acquisitions that just scale up the company and add value to shareholders that much more.
Okay, great. Well, thank you for coming on to our podcast, Nolan. If people want to find out more about your company, where can I go? And also, if you don't mind, give out your ticker symbol as well.
Yeah, if they want more information, they can go to our website. Both Sandstorm Gold and Sandstorm Metals and Energy share a website landing page, and that's at www.sandstormltd.com, and that's LTD as in limited. And the ticker for Sandstorm Gold is SSL, and that trades on the Venture Exchange. And the ticker symbol for Sandstorm Metals and Energy is SND, and also that trades on the Venture Exchange.
Thank you for your time, Nolan. That was a great interview.
Yeah, thank you.
I appreciate it.